as the snow begins to melt, I start thinking about things that we're going to do in the spring and the summer, and one of them could be getting on a roller coaster. And obviously we saw that this week, Derek. The market really jumped around on both Monday and Friday.
Right, we had big up days on Monday and Friday, big down days in the middle of the week. We actually closed on the upside, up almost 80 basis points with the S&P 500. And Friday was really an interesting day because we opened very weak, and lots of people were on CNBC and the rest, talking about the end of the bull market and inflation and higher interest rates. But around the middle of the day, the market recovered on pretty big volume and closed right on the highs of the day. So that's a good sign. But generally speaking, what we've been seeing is rotation within the market, not exit. No one's really exiting the market. They're just moving the chips around a little bit, no pun intended. And that's causing people some consternation if they haven't rebalanced their portfolios.
And the day started with an unemployment report and a jobs report. And it was probably one of the reasons we saw the rally later in the day, up 572 points, nearly 2%. But that jobs report really was pretty good.
It was very good. Non-farm payrolls were up 380,000 month over month. There were upward revisions to the prior months. The unemployment rate fell to 6.2%, still well above where we were pre-pandemic, but certainly we're making progress as more and more people in the hospitality services area are hired.
And one of those things that we're starting to see is not only as the economy begins to reopen, is that people get vaccinated. That's helping as well. So the economy is beginning to reopen. More people are getting vaccinated. The number of cases is declining. All of that is positive. And as I started the show with, in springtime, people get in a better mood as well.
Absolutely right. We know that personal income is up almost 13% year over year. There's extraordinary pent-up demand to go visit relatives, to go out to a restaurant, go to a movie, or do whatever. And it's really shaping up for quite a strong economy this year, which is going to be one of the challenges we face as a committee. Just because you have a strong economy does not necessarily mean stock markets always go up.
That's right. And by the way, you started with the Fed chairman and the Fed report, and I think we have to talk about that because it's certainly a big part of the interest rate story.
Yeah, he spoke on Thursday, and I think people were looking for him to say something about the steepening yield curve because there are some that are concerned that if long interest rates go up much more, that steals some of the relative attractiveness from the equity markets, which could presage a sell-off. And he really didn't go there. I mean, he talked about the same thing he's been talking about, that he thinks inflation is going to increase over the baseline, and remember, the baseline is a shutdown economy. So, of course, oil prices are going to go up in the face of that. But generally speaking, he just stayed with the script. But in my opinion, he ultimately is going to do exactly that. It's called Operation Twist. He'll try to push down long rates a little bit because he wants to see the economy back to 2019, 2018 levels in terms of employment and wage growth.
And when there is inflation, despite the fact that he said it's transitory, we are certainly seeing inflation in commodities, for example. We saw oil go up. In fact, we can talk about that in a second, as well as housing prices continue to rise.
Right. Housing prices are up double digits. I was actually talking to a guy who was driving me to get my car yesterday in an Uber, and he was saying that his sister-in-law just sold a house for 30% more than she paid 2 years ago. So that just gives you a sense of the lean level of inventories and the amount of personal income that's been saved. And interest rates are low, and that might cause people to rush to buy homes because they want to do it before mortgage rates get too high.
And good luck finding one, right?
Well, in interest rates, that's right. The supply is certainly down, and interest rates are up. The 30-year mortgage now over 3%, and that might accelerate the pace of purchases as well. Therefore, as the interest rates continue to monitor and move up, we've talked about this over the last several weeks, Derek, is that maybe we're not done with this interest rate move on the way up, which means the volatility could continue for the next several weeks.
Yes, we mentioned last week, the 10-year yield at the end of 2019 was at 1.92%. Despite the rally this week, or the decline this week in bond prices and the increase this week in yields, we're still sitting at about 155, so well below where we were before the pandemic. And I don't think it's unfair to suggest that interest rates could go back up to those levels as the economy reopens.